your Nearpod screen. All right, so hopefully everybody recognizes this is our very basic balance sheet. We've got our assets on the left and liabilities and owner's equity on the right. When we get into chapter 21, which we're starting right now, to do the statement of cash flows, what you need to recognize when you're looking at a statement of cash flows is that it is essentially using all of that accounts on the balance sheet and the income statement to explain the change in cash. And everybody remembers the three sections of the statement of cash flows. You've seen them on your FTQs all semester. But just to reiterate what they are, you've got your current assets and current liabilities. These are your working capital for the company. This is what makes up your operating activities. So when you dive deep into chapter 21 and you're thinking about the different sections of the statement of cash flows, the operating activities is going to be where you pick up all of the activities in your current assets and current liabilities. Okay, so all the receivables and inventory and prepaids, and then all the accounts payable and all the accrued liabilities are the operating activities. The long-term assets, those represent the investing activities. Okay, so whenever you see a statement of cash flows, everything that's in the investing activities section has to do with long-term assets. There's a couple of exceptions. One refers to something we just studied in chapter 12, and that has to do with some of our shorter term investments that are trading securities. They would show up as investing activities. But generally speaking, that's your long-term assets. And then finally on the balance sheet, oh, the code. The code is CZKOM. Yeah, thanks, Con. The long-term liabilities and owner's equity, those are going to make up your financing activity. Okay, so the financing activities are in that lowest section you see in the statement of cash flows we're going to look at in just a second. But just to, it's kind of a handy way to think about the different sections of the statement of cash flows. And when you're doing the preparation, it's kind of in the back of your mind, a big check on, okay, have I put things in the right place? Okay, so the operating activities are going to explain the changes in the current assets and current liabilities. It's where you're going to present those changes. Long-term assets, you're going to present the changes that affected cash having to do with your long-term assets. And then your financing activities are going to present the changes in cash that had to do with your long-term liabilities and your owner's equity. So if you hadn't thought of it that way in the past, maybe that kind of turns a little bit of a light bulb on for the statement of cash flows. All right, so that's just a real quick overview. Again, tonight's just a real quick overview. So you should be able to open this page up. Oh, and it went to the very, very beginning. Oh, there we go. And this is the statement of cash flows we're going to go to for Walgreens. And so if you scroll down, you have this on your pod. The statement of cash flows, I want to just show you real quickly what the completed statement is going to look like. Almost out of room there. And point out this statement of cash flows from Walgreens has the operating activities, the investing activities, and the financing activities. This particular statement is prepared on what is called the indirect basis. The indirect basis is called the indirect basis because what you do is you start with net earnings. It came off the income statement. And if you think about way back in your earliest accounting classes, you learned that the income statement is prepared on an accrual basis. So on the accrual basis, you have a net income number. And then at the indirect method for the statement of cash flows, you start with that net income or net earnings number, and you make adjustments, and reconciliation items help you turn that into a cash-based number. So essentially, you start with net income, and you indirectly turn that into a cash number. That's why it's called the indirect method. So you do some things that you will, when you dive into chapter 21 and all the materials you have on Canvas, you'll see you add back non-cash items from the income statement, and then you have all of those changes in these current assets and current liabilities in that operating activities. Then you've got the investing activities, and then you've got the financing activities. And then at the bottom of the statement, that comes down to a change in cash. And this is where a lot of students think they're done, but you're not done when you get the change in cash. You have to also include the cash at the beginning and the cash at the end. And that cash at the end has to match what's on your balance sheet, right? So that's a quick overview of a statement of cash flows prepared on the indirect method. I'm going to show you another one that is prepared on the direct method basis, and this is CVS. And for this one, you have to scroll down to, I think it's page 36. It's quite a ways. No, it's further than that. All right. It's page, not that far. There we go. It's page 41. 41 would be the statement of cash flows. So this is also a statement of cash flows. This is CVS, right? One of Walgreens' famous competitors, right? That you see on the opposite corner of every Walgreens is that CVS. CVS, statement of cash flows, has the same sections, operating, investing, and financing. Same thing at the bottom where you have the change in cash and the cash at the beginning and the cash at the end. But what is very different is this section, that's operating section, is not prepared in the indirect method. It's prepared using what's called the direct method. GAAP lets companies choose which one they want to use. I will tell you, I think like 99% of all companies use the indirect method, like Walgreens. Only a small number, 2%, use this, what CVS does. So this is the direct method. The reason it's called the direct method is because in the operating section, it shows you directly where cash comes from and directly where cash goes. Okay, so you see lines that say cash received from customers, cash paid for inventory, cash paid to employees. You see interest paid and income taxes paid. These are all directly shown the amount of cash that's paid. Back at the indirect statement we were looking at, you didn't see the actual cash amount. You had a net income, and then you had some reconciling items that came to the same, it would come to a cash from operating activities number. Obviously, Walgreens and CVS are not going to have the same cash from operating number, but if CVS had used the indirect method, they would still get the same operating activity cash. Likewise, if Walgreens had used the direct method instead of the indirect method, they would get the same cash operating activities that they did before. So the methods are really just kind of presentation methods. They don't give you different final numbers for operating activities. So that is what, but then there's investing and financing activities. Everything else is, you know, the same format. And that's what I wanted to show you real quickly to get a view of what the statements actually look like.